G'day everyone. As you know, last night the Treasurer released a belated budget for 2020 and 2021. It was something we've never seen before because we're in times that I've never seen before. It was a massive spending budget, and I'm going to go through some of the key business and tax changes that are relevant to our clients. The big, and this was leaked before the budget, the backdated tax rate changes. They brought those forward, and so essentially from 1 July 2020, so they're already in now. So there's going to be a bit of a backdating of some tax cuts. The 19% rate, which normally cuts in at $37,000, lifts up to $45,000, and a really important rate for us accountants is the 32.5% rate, which normally kicked in at $90,000, is now kicking in at $120,000, and that will feed into a lot of planning we do around the distributing to a company versus an individual. That possibly means an increase of income to individuals to take advantage of that higher now threshold kicking in at $120,000. Some other important changes for small business from 1 July 2020, they're lifting the threshold for the qualification for a lot of small business concessions from 10 million turnover to 50 million turnover. Some of those include an immediate deduction for 12 months worth of prepayment, so you can prepay an expense in your business up to 12 months worth, and if your turnover is under $50,000 you can claim that immediately. Some other FBT exemptions have been extended from to a much larger business now, those with a turnover under $50,000. Another small business change in the same line as the one before, where the threshold's been lifted from 10 million to 50 million from 1 July 2021. They're allowing change to the simplified trading stock rules, and also interestingly and quite welcome, the amendment period that the ATO has to amend an assessment, that is like an audit where they come and change reassess you, will be changed from 4 years to 2 years for those taxpayers under 50 million in turnover. That's from 1 July 2021. The big change that's getting all the press is the immediate asset write-off. Now, we've had versions of that since COVID hit in February and March. Essentially last night, from last night, all but apparently 4 or 5 businesses in Australia can buy assets from last night through to 30 June 2022 and immediately claim the cost as a tax deduction. This is unprecedented as far as the kick to the economy that this will give, and in essence it means that even small businesses or large businesses as of last night can acquire assets and claim them immediately, but they must be new assets. Now, we've already had the exemption or the immediate asset write-off for small businesses. That was going till 31 December. That also covers used assets. That's extended to 30 June 2021. So a small business under 50 million in turnover can buy a used asset up to 30 June 2021 and claim that outright. But all new assets, every business in Australia, all but a few, we can write those off immediately all the way through to 30 June 2022. And that is such a massive hit to the economy that we'll be able to, for the next couple of years at least, immediately write off those items of equipment. Another welcome change is what we call, what's referred to as the loss carryback rules. So without getting technical on you, when an entity makes a company makes a loss, it is only able to carry it forward, never backwards in time. So in the announcement in the budget last night, they've brought in what's called a loss carryback rule. Now, we had this in 2013 for a couple of years. It wasn't overly popular, but essentially what they're saying, because of the COVID related impact to businesses, if you make a loss from the 20 year, 21 year or 22 years, that's 30 June, so the year where we've just ended, the year we're now in, and the following financial year, if you make a loss, you're able to go back in time and apply that loss to profits that were made any time after the 18-19 years. So to give you a simple example, if a client is still really impacted by COVID in the 21 year, the year we're in now, but was quite profitable in the 20 year, so they've paid tax in 2020, COVID hadn't hit their business to that extent, they're able to bring back the loss and apply it against an early year where they pay tax and actually get a refund. Now, there's going to be some some integrity rules, anti-avoidance rules, but at the end of the day, we're able to go back and claim for tax you've overpaid in a previous year because we're allowed to bring a loss back in time. So it's going to be very interesting using that in conjunction with the instant asset write-off. It means you can actually go and spend a lot of money on capital assets and even create a tax loss which you can use to get a refund of early years tax paid. Quite a massive change to the way we've managed people's tax bills in the past. So again, that's going to require a bit of planning. Talk to the person you contact at WMS about how do you massage those two different announcements. Another welcome change for those businesses who want to go out and start employing people, hopefully they're recovering, is called the Jobmaker wage subsidy. That is, if you go and employ a person who's previously been on job seeker or youth allowance, and you bring them into your company and you give them more than 20 hours a week, 20 hours of work a week, you are entitled to a wage subsidy of $200 a week for those employees who are aged between 16 and 29, and $100 a week for those employees aged 30 to 35. And that's a 12-month scheme, so it's essentially a wage subsidy, much like JobKeeper was, but it's very much targeted at getting people off the Social Security into the workforce. A really welcome change in the corporate tax field is the clarification last night about the corporate residency. I know that's pretty boring to a lot of you, but a lot of clients have got overseas operations. There's been so much uncertainty about when a company is a resident or not resident of Australia. The tax office has been really giving some odd rulings as a result of a case a few years back, causing way more companies to be treated as residents. Last night's announcement said they're going to revert back to perhaps a more relaxed stance, and there'll be a lot more to come out about that, but it does give a lot of certainty and clarifies the position that it's maybe not going to be as harsh as we've been assuming it has been up until last night. So I suppose that budget last night was what is necessarily needed to give the economy a massive kickstart. I hope it does that. There's so much in there for small to medium businesses, including many of the announcements that work well together, such as the depreciation instant asset write-off and the loss carryback rules. That we've never had those two operating at the same time together before. So please, if any of this is relevant to your business, which I'm sure it is, you just need to reach out to your contact at WMS and we'll walk you through how you maximise the advantages that come out of these announcements. And please feel free to give any of us a call if you've got any queries or want further information on any of the announcements last night.